Beyond Meat is waking up to another critical week, and right now, the entire play feels like a stretched rubber band. It's either pulling back before catapulting forward again, or it's snapped, and all that energy has been released. We don't yet know which it is, but what we do know is that the tension in this stock remains very, very real. After last week's wild ride, where BYND soared from the depths of penny stock territory all the way up to over $7 before collapsing back toward $2, the dust has settled, but not the setup. The stock finished Friday at around $2.18, down sharply again, and even lost a bit more in the aftermarket. But that pullback doesn't tell the whole story, because under the surface, the short squeeze dynamics are still alive. The market is in a standoff. Retail traders are watching. Shorts are still loaded. And the setup is now all about what happens next. Does this rubber band stretch back for another snap upward, or has it broken completely? Let's take a closer look at where things stand as we head into the Monday pre-market. First, the setup itself hasn't disappeared. BYND remains one of the most heavily shorted stocks in the market. Depending on which data source you look at, short interest sits somewhere between 60 and 100% of the available float. That's insane. It means that, mechanically, there is still enough short exposure in this name to create explosive moves if momentum shifts. Every uptick in price forces shorts to think twice, and every period of silence lulls them into thinking it's safe to re-enter. It's the perfect recipe for volatility. But right now, the rubber band is being pulled back. Traders have taken profit. Volume has cooled. The noise on social media has died down just a bit. That's what makes this moment so important, because markets often move from quiet tension into sudden violence. Either direction is possible. The bearish side argues that the squeeze is done. They'll point out that volume has evaporated, the price is back to pre-squeeze levels, and that the fundamentals remain as bad as ever. They'll tell you that dilution, debt, and declining demand for plant-based meats are insurmountable. And honestly, those are fair points. But the bullish side looks at the same data and sees something very different. They see a stock that just went through one of the most aggressive short covering waves in years, and survived. They see a company that, while still struggling, has an earnings date on November 4th that could reignite speculation. And they see a social media crowd that, while quieter, isn't gone. The bulls see the rubber band being stretched, not broken. So which side is right? That's what this week, and especially Monday's session, could tell us. Let's talk about what to watch in the pre-market and through the day. Number 1. The opening tone. If BYND gaps higher in the pre-market, even slightly, and we see volume picking up before the bell, that suggests buyers are already creeping back in. That would be the early sign of a potential snap back. But if the pre-market is flat or red, it may indicate that traders are still too nervous to step in. Number 2. The volume reaction once the market opens. A genuine rebound attempt needs confirmation through volume, tens of millions of shares traded within the first hour. If price moves up on light volume, it's likely a fake out. But if the tape lights up again, you'll know the rubber band is tightening for another push. Number 3. Social sentiment. Check how loud the chatter is across Reddit, X, and StockTwits early Monday. During last week's run, Beyond Meat was the most mentioned stock across all retail platforms. If that energy comes back, it could signal that the crowd is waking up. If instead it's quiet, the stock may just drift through Monday and look for direction later in the week. Number 4. Support levels. Keep your eyes on the $2 mark, that's the psychological and technical floor right now. If that level holds, the structure remains intact. A break below 2, especially with volume, would signal that the band might have snapped and we could see the stock drift back toward 150 or lower. On the flip side, resistance sits around $3.50 to $4. A clean move above that level would confirm that the setup is reigniting. And number 5, options flow. When the next squeeze attempt begins, it usually starts in the options market. Look for call option volume to spike, especially on short-dated strikes. That's the kind of speculative flow that often precedes sharp upward moves. So, what's the mindset heading into this week? The key is to think like a tactician, not a believer. This isn't about conviction in Beyond Meat's brand or long-term prospects. It's about understanding how short squeeze mechanics work. These setups move in cycles: compression, expansion, exhaustion, and reaccumulation. We've just finished an expansion phase and are now in the exhaustion and compression stage. The next move, whether it's up or down, will come when that energy releases. Think back to GameStop and AMC. Both had multiple waves of squeezes, separated by long, quiet consolidations where everyone assumed it was over. The traders who made money weren't the ones who held blindly, they were the ones who recognized when the setup was sleeping and waited patiently for the wake-up signal. This is that kind of moment for Beyond Meat. If the rubber band is simply stretching back, the next wave could come fast. The conditions for it are still all there: enormous short exposure, low float, and a retail crowd hungry for another win. But if it snapped, you'll know soon enough, and that's where discipline comes in. Don't chase every green candle. Wait for confirmation. Let the market show you its hand before you show yours. The best way to think about it is in probabilities, not predictions. There's maybe a 40% chance the stock snaps back this week. There's another 40% chance it just trades sideways and resets for a future catalyst. And there's about a 20% chance the band really has broken, leading to more downside. Each of those outcomes demands a different reaction, but all of them demand patience. Heading into Monday, here's the playbook. Watch for early session volume surges. Monitor the $2 support zone. Track social sentiment during the morning hours. Keep an eye on option flow for unusual activity. Remember that the next major scheduled catalyst is earnings on November 4th. If the stock holds steady and buyers show up into strength, that could be the early sign of another push. If it breaks support and volume fades, the setup might enter a longer rest. Either way, the message is simple: the tension remains. The rubber band may have lost some stretch, but there's always another one waiting to form. Every time shorts pile back in, every time sentiment rebuilds, the setup resets. That's the cycle. So as the market opens Monday, approach this with a clear head. Don't get caught in the noise of it has to go up or it's over. It's neither. It's a rubber band waiting for the next stretch. And whichever direction it snaps, it's going to be fast. In trading, patience and readiness beat prediction. Beyond Meat is still one of the most watched and structurally explosive names out there. Whether this band is reloading or broken will become clear soon, and the traders who are calm enough to watch it unfold instead of forcing it will be the ones who benefit most. So as you head into Monday's pre-market, remember, the setup lives on, even when the chart looks quiet. The squeeze mechanics are still baked in, the short positions are still massive, and the crowd is still watching. It's just a question of when, not if, the next rubber band gets pulled tight again. Stay alert, stay patient, and keep your focus on the signals, not the hype. Because in plays like this, the big moves don't announce themselves, they sneak up while everyone's arguing about whether the band has snapped or not. And when it does stretch again, be ready.